but we have Greg Gianforte with us, and he has to leave at 10:30. And so I would like to ask him to come forward and sit at the table and give us his presentation at this time, if we could.
Thank you, Mr. Chairman. I really appreciate the flexibility in your schedule this morning. And the rest of the committee members, I want to thank you very much for taking on this nasty, knotty problem. I don't envy you. It's complicated, and there are going to be a lot of people.
And Greg, could you give us just a little of your background, sure, and who you're with?
So, as I said, it's going to be a nasty, knotty problem. But again, my name is Greg Gianforte. My home is in Bozeman, Montana. I'm in the software business, and I'm the CEO and founder of Right Now Technologies. And I congratulate you on your willingness to work on this problem. There is no more significant problem if the state has any hope of retaining and growing a high-tech economy. What I wanted to do this morning is just share with you a brief background on our business, and then the specific issues we're facing because of the current tax code, how it impacts our business and our ability to attract employees, retain employees, and even keep the jobs in the state. And then this is a problem that I'll give you. I don't want to necessarily have to wrestle with all the problems you have to, but I'll give you the value of the input that I have. And you can throw that in the pot and mix it around with everything else. So that was my objective. Again, Right Now Technologies is a software company. I founded the business just over 4 years ago. We currently employ just over 200 people. The vast majority of those are in Bozeman. Our average wage is just north of $52,000 a year. So I think these are the types of jobs that we want to create in the state. And the business itself, we have sold software. Almost all of our business is outside of the state. During the last 4 years, we've brought about $70 million into the local economy. And an interesting aspect of the software business is about 75% of our expenses are wages. We don't have a factory. We have zero cost of goods. We don't manufacture anything. We just copy ones and zeros on the disks and send them over the internet. So our only expense is wages. So of that $70 million that we brought into the state, somewhere between $40 and $50 million went into the local economy in Bozeman through the form of wages. And those dollars bounce around in the economy and buy houses and buy cars and buy meals and put kids in private school and do all the sorts of things that you want to have happen in a vibrant economy. My wife and daughter happen to be with me today. We're thrilled to call Montana home. We've been here for 7 years, and it's our full intention to stay here. But this tax code represents a huge impediment to doing business in the state. I want to share some specific things with you that we're facing. The first, I think Dave Gibson did a great job of explaining how in high tech, most gains are achieved through certainly current income, but mostly capital gains. And that income tends to be lumpy. It tends to come when liquidity events occur with businesses. Unfortunately, the way the capital gains structure is currently structured in the state, it's essentially an incentive to leave the state just prior to any opportunity to sell stock or transfer an asset. And we've been very fortunate to hire a lot of people from the Rocky Mountain region. We have a whole contingent of very, very bright guys. One guy's a PhD in psychology and a master's in computer science, but he came from Sheridan, Wyoming. And we've been very fortunate. We've been able to give 30% of the company to our employees in the form of stock options. When we become a public company and there's a market for those shares, each one of those employees is going to be faced with when should they sell that stock and what state do they want to live in when they sell that stock. Right now, with capital gains being taxed at a regular income rate, it's essentially a financial incentive to leave the state when they choose to market that stock. The second difficulty we've been having is in recruiting executives to run the business. My previous business I was involved in starting the business, grew to over 4,000 employees. We did over $1 billion in revenue annually. The company was Network Associates. And we need to recruit world-class executives. I currently have executives who would not move into the state. And we had to station them in our Dallas office, although they'd love to be here in the state. These are individuals that have current income between $200,000 and $300,000 a year, but they can't afford to move into the state. They can stay in a state like Texas and pay zero income tax. So we've set up an office in Dallas because we need world-class talent and we can't get them to move to the state. Long term, that doesn't bode well for our ability to be competitive in the world market. And I commend the work that's been done, the preparation. I mean, the materials you have are tremendous in making the hard decisions you're going to make. I would challenge one assumption, and that is that we're competing against the 8 local states here. We're running a worldwide business. We have an office in London, Sydney, Australia, Tokyo, as well as Dallas, Texas. And when we compete for executive talent and the talent we have on our teams, we don't compete. We're not searching in Idaho or North Dakota or Wyoming. We're in Texas, Massachusetts, California. Those are the states that we're competing with day in and day out. And I'd like to think that we're thinking big enough that we're trying to not get an economy as good as Idaho's, that we're trying to build an economy that's world class and that competes nationally against any other state we can stack Montana up against. So that's the challenge I provide to you. And so I think our competition, when you think about what's the bar we need to measure against, our competition is at zero income tax rate and zero capital gains rate. I picked up on that note, Doug, as well, that the states with zero income tax rate got dropped off the charts. That's our competition in the state. So that's the background. That's the impact on businesses. I have 3 particular solutions I'd like to present briefly to you for consideration. And I have a single sheet with my hand with my notes that I'll pass out when I'm done here. But the first is what I would consider an ideal solution from a high-tech perspective. If we're interested in creating high-wage jobs that don't impact the economy, that can allow the next generation of Montanans either to stay in Montana or return to Montana, I think these are the jobs we want. The best solution, because our competition's at zero income tax rate and zero capital gains, would be to replace the current income and capital gains rate with a sales tax. And I know that there are huge political issues and constitutional issues, but I didn't think I'd be fair in coming here and not say that I believe that is the ideal solution, to move to a consumptive tax that would focus more on maybe the tourism industry we have in the state. But if you want high tech, our competition has zero income, zero capital gains. So that's an ideal solution. I understand it may be politically untenable. And maybe for those in the group that are in agriculture, maybe there should be exemption for farm equipment. I don't know. But somehow it has to be made palatable so it would work politically. So let's assume for a second that's an ideal solution. My input to you would be that a proposed solution is very close to what you're considering. That is replacing, eliminating federal deductibility and lowering the marginal tax rate, because listen, I'm an engineer by training. I have a master's in computer science, but I do a lot of time doing marketing stuff. Perception is reality. It doesn't matter what reality is. It's got what people perceive reality to be. And the 11% is an offensive tax rate. And I get that reaction when we're trying to recruit every day. So replace one with the other. That would put us on par with California or so in terms of overall tax rate, income tax rate. It's not an ideal solution, but it'd be a step in the right direction. The second thing is we need to do something about capital gains. We have an incentive right now with the current tax structure to encourage our successful employees and knowledge workers to leave the state if they ever are able to convert some of that wealth they've created into real value. And I don't think that's what we want to do as a state. The third part, and I think the other committee's been charged with this, is looking at the tourism and resort taxes as a way to kind of make up the difference. Because I understand the realities of being revenue neutral. We've got to work those things out. I would offer one final additional solution, which is an idea, and again, I think the governor did a great job of challenging you all to think outside the box and not accept the status quo. If we want the state to be receptive to high tech and create these higher jobs, I would offer that you may, and it may be politically impossible to do the wholesale change from an income tax to a sales tax. I would challenge because we don't have currently a lot of capital gains revenue at the state level today from high tech, I offer that you may want to consider some type of targeted capital gains incentive for businesses that are started that create high-wage jobs here. Now, the state would benefit because the wages are all getting paid in the state. You still get the income from the income. Now, but some kind of targeted program that would create a high-tech haven that the governor and the administration could weigh very highly on a national level to say, come start a business in Montana, and if it's in, you define the scope of it, but if it's in high-tech and the jobs are created in the state, well then, we'll expect you to pay income tax, but capital gains is going to be paid. And because there's not a lot of income coming from the state right now, it would not have a negative revenue impact, but it could potentially be a solution to change the perception, which is the reality. So that's what I had to offer. And, I'll pass these around. This is just really my talking notes. I did include one other thing on the back of this, which was we had a nice article in Inc. magazine in February of this year on starting and growing technology businesses in Montana. It was a 7-page article, so I included that as well in the package.
Thank you, Greg. Are there any questions, Leo?
Yeah. Greg, what prompted you to either move to or stay in Montana? Tax structure.
Oversight. I mean, that's probably. I want to be honest. I've been coming to Montana for over 20 years for recreation, and my wife and I and our 4 children relocated here 7 years ago. And you know, we made a lifestyle change to be here, and we put roots down here, and we love Montana. We call it, you know, it's been our home for 7 years. If we had done our due diligence, Montana would not have been a state.
Which state would it
Could have been Wyoming. Could have been somewhere else. I had, you know, again, as Dave said earlier, it was as much an emotional decision as anything else. So, but now I view myself as a Montanan, and I want to be on the team to create an environment that might attract more people that can create the kind of jobs we want. But of the 3 sizable technology businesses involved, Larry Johnson, Chris Nelson at Zoot, and myself, the other 2 gentlemen, you know, also had roots here. What we don't see is a lot of entrepreneurs moving into the state when they do their due diligence and consider these other things. We're planted here now. But I think forward to the point where this is the 5th business I've started and grown over the course of my career. And, you know, we're headquartered in Bozeman. It's a great place to be. But the life cycle of technology businesses is much more of a sort of petri dish where businesses get created and change hands and they move around. That's a healthy sort of organism that goes on. We're going to have a difficult decision in a couple of years when this business morphs into something else. And, you know, there's going to be probably a $7 to $10 million personal incentive to leave the state. And I'm not here to talk to you about that today, but I hope I don't have to make that decision.
Senator Tester.
Thank you, Mr. Chairman. Thanks for your presentation, Greg. You sell, you said you have an office in Dallas and one here and then throughout the world. Do you sell your software exclusively out of Montana, or is it sold out of Texas too?
Yeah, it's sold out of Texas, it's sold out of London, it's sold out of Sydney and Tokyo.
Okay, do you get since we don't have a sales tax, is there any tax advantage to your customers selling the software out of Montana since we don't have a sales tax?
It's not, it really has no influence on the customer's purchase decisions. Typical transactions are, you know, between $75,000 and $100,000, and at a business level, the sales tax issue, it just doesn't come up in the conversation.
Okay. Kurt?
I know we're running behind, Mr. Chairman, but one thing that Greg, you shared with me in a personal conversation, we've talked about average effective rates, and Larry had just gone into relative ranking, you know, 3rd or 4th, 1st or 2nd. That's when you take federal deductibility into account, but maybe you had given us a brief account before, maybe you could do it again for this group of what can happen in folks in your industry with the timing of the federal deductibility against the timing of your income.
Yeah, and I think you had asked if we had shared our personal tax returns, federal returns with the Department of Revenue, do some analysis over the last 5 years. And it's because of the timing of the state tax payments and the federal deductibility, the 2 don't always match up. And for an entrepreneur whose income tends to be lumpy, I'm sure there's some people in the audience who have similar issues, the actual state taxes paid fluctuate wildly year to year. And I'm proud to say we do our fair share. But Last year, it was at the high end of the range. We just finished our 2001 return, and we paid 0 state taxes this year not because, it's just the way the numbers worked out. And the other thing that eliminating federal deductibility would do is smooth out the tax burden for entrepreneurs in the state. And this has to do with the timing of the state payments versus and I'm not a CPA, but the way this works out, it makes state tax payments very lumpy and with peaks and valleys for an entrepreneur.
Senator Tester?
A few years ago, federally, we had a thing called income averaging. Is that something that would help eliminate those peaks and valleys?
I think it would certainly make the thing that would eliminate it is eliminating federal deductibility. It really has to do with the fact, and Kurt, you may know better, but it has to do with state payments. You only count them through the end of the year, but the federal allows it through April 15th, and because of that time lag, federal obligations can fall into a different tax year than state obligations, and they don't always offset each other. And that's where the problem comes in. And eliminating federal deductibility would eliminate that problem.
Thank you very much, Greg.